Caroline Hyde in London, in for Emily Chang. This is Bloomberg Technology. Coming up, Tesla takes off after CEO Elon Musk claims his electric car company won't need to raise more money this year. Plus, the Bitcoin bounce will chart massive gains made this week by the world's most valuable cryptocurrency, and if it can be sustained. And after Mark Zuckerberg's double date with Congress in D.C., we recap a long week for Facebook and its CEO, plus what lies ahead. And the US Treasury Department released its semi-annual Forex report, foreign exchange, just a few moments ago. Much of the nation's currency outlook has remained the same, but the US maintains the line that no nation is a currency manipulator, but added India to its watch list. We're seeing the likes of China, Switzerland, Japan all remaining on that watch list as well, but notably India being added. Now, after taking a beating in recent weeks, our top story of Tesla shares climbed in Friday's session. That's after a tweet by CEO Elon Musk rebuking a report from The Economist, saying The Economist used to be boring but smart with a wicked dry wit. Now it's just boring. Sigh. Ooh. Tesla will be profitable and cash flow in positive in Q3 and Q4, so obviously no need to raise money. That was the tweet, pretty damning on The Economist, which reported the electric car maker will need between $2.5 to $3 billion this year. But does Wall Street agree with Musk's optimistic outlook? Here to tell us more, Bloomberg's Detroit bureau chief David Welch joins us. And David, I mean, very few stocks divide the Wall Street analysts in between lovers and haters, investors between lovers and haters. I want to dive into the Bloomberg and look at GTV, because this just shows you how many shorts, how many bearish bets there are out on Tesla. 25% of the overall float in Tesla is currently shorted. Phenomenal. That's like the most in any US stock. Why the love and the hate?
Yeah, that's right. And actually, it's now the most shorted stock. For a while, it was Apple, and now it's back to Tesla. You have true believers who think that Elon has a vision for electric cars and even for autonomous cars that he will bring to reality one day. And with great technology and a great brand, he'll really be able to cash in, and then investors will make a lot of money. The haters, as Elon and people in Tesla call them, or the shorts, the bears, think that he will run out of money before he gets to that vision, and then the shares will come crashing down, and somebody else, maybe it's General Motors or Mercedes or a combination of all the existing car companies, and maybe Google will actually be the ones who make the cars of tomorrow that drive themselves and run purely on electricity. And those are the two opposing views. And until Tesla shows that they can make money and stand on their own 2 feet without having to raise more cash from investors, you'll have a bunch of shorts out there pushing that story and shorting the stock.
And keeping a keen eye on the cash flow, in particular, that he was tweeting about today, saying, look, we will be cash flow positive in Q3, in Q4. Why had many been eyeing this particular figure up? Because there is a phenomenal amount of debt out on the company.
There is. So Tesla has about $10 billion in debt already, and they're already spending quite a bit of money on interest payments. They're spending a lot of money to develop future models, and they're burning cash. It's supposed to burn more than $1 billion this quarter. And in the last 4, they've burned close, 800 or 900 million on average, quarter to quarter. So the bulls have a point that they don't really see any reason in sight why Tesla would stop doing that. And the analysts, to be fair to the economists, they didn't make this number up out of whole cloth. Analysts have estimated Tesla needs to raise $2 billion or more later in the year. What Elon is saying is that they will get production of the Model 3 up enough and bring enough cash in the door by selling those cars where they won't have to go back to the market and raise money. In other words, they'll, just by selling their cars, be able to stand on their own 2 feet. So a lot of ifs there. They've got to get the cars out. The cars have to, at least be close enough to profitability where they're bringing in positive cash flow. And we'll see if they do that, if they're able to get cash flow positive.
I mean, there's a lot of ifs there. It really feels like the Model 3 is the make or break here.
Yeah, it definitely is, and that's what a lot of people are betting on. The Model 3 can do a couple of things. If it's even close to being profitable and the cash flow picture and the balance sheet do improve as a result of this, it could actually establish enough credibility where Tesla can continue to raise money from investors. And because that's another question that the bears have is if they don't, if the Model 3 continues to have massive delays, if it doesn't make money, and if they're burning a lot of cash even when it's up to full production, the street will just get tired and stop giving them money, and then eventually they run out. So that's the big make or break here. Does the Model 3 bring in enough money where they can put off that day and remain credible with the market so that they can bring in money once they do actually need it?
And that's why, of course, Elon Musk has been sleeping down at the factory, as he's been telling people. But talk to us, giving us an update on, this hasn't been the only headwind, the Model 3 sort of issues of getting them out onto the road quickly enough. But also there has been, very sadly, the tragic event where there was a crash in particular that resulted in someone's death of a Model X. Can you give us an update of where Tesla is with that? Because there's been some bit of antagonism when it comes to the investigation.
There is, and look, that's another reason why Tesla shares are so controversial, because there's kind of a lot of drama here. Elon tends to tweet things out, and that can move the shares, it can get people in a lather. In this case, you have a government investigation of this fatal crash. The driver was using autopilot. Elon has gone out on Twitter and actually blamed the driver, and he's actually given out information about the crash. The government didn't like that, and they've given him rebukes and letters, and they also pulled the company off of the investigation. Elon's retort was that the government takes too long to investigate things, so he's going to put information out. He doesn't want to leave people in the dark for that long. Generally, when companies are being investigated, whether it's the Justice Department, whether it's one of the safety boards, they kind of keep quiet and cooperate. They don't want to anger the government anymore. Elon doesn't really take that route, so you've had this tit for tat on Twitter and with press releases from the government, and these things do weigh on the shares because autopilot is an important piece of what Tesla does, and if there are problems with it, and if the government's investigating it, that could show that they're going to have to delay this. And look, we've already got questions about self-driving cars because of the Uber accident that happened not too long ago as well.
Questions about autonomous vehicles, questions about Tesla going forward. When will questions be answered? When can we get some demonstration that they are managing to hit their targets, in particular with the Model 3? I mean, we've got earnings coming out on the 2nd of May. Is that the key date?
You'll probably get an update there on how they're doing with production and how quickly it's ramping up. What Elon has said is that in the second quarter, you really see production accelerating. So they may give updates throughout the quarter if things are looking really good. Elon has been known to do that, and just if he has good news, just throw it out there via Twitter. But generally speaking, I think second quarter earnings, when they might give a big production update and a sales update, you might really start to see if they're hitting bigger numbers that he's been hinting at and promising in recent weeks.
We'll see whether he tweets anything out in the interim. Bloomberg's David Welch, I know you'll be all over it if he does. Thank you very much indeed for joining us from Detroit. Now, meanwhile, Asia's #2 software services firm is also giving a rosy outlook. Infosys is forecasting a 6 to 8% rise in sales this year. That's reflecting growth from a move into more lucrative digital services. Infosys reported net income of $566 million for the March quarter, generally in line with estimates. Now, coming up, we recap Bitcoin's blockbuster week. But was the cryptocurrency comeback just a fluke? We'll debate. And if you like Bloomberg News, check us out on the radio, why don't you? You can listen on the Bloomberg Radio app, Bloomberg.com, and in the US on Sirius XM. This is Bloomberg. Now, a Moscow court ordered telecommunication companies to block Telegram in Russia. That's after the chat app refused to grant government access to users' encrypted messages. Now, the move is a blow to the company that just weeks after it raised $1.7 billion from investors via its own ICO, initial coin offering. Meanwhile, keeping on crypto, and Bitcoin investors are seeing some light in the bear market tunnel. While it remains to be seen whether it's the end of this year's slump, well, the 23% gain over the last 5 days has them cheering. The largest cryptocurrency is heading for its biggest weekly advance since just before it peaked at almost $20,000 back in December. Other large cryptocurrencies such as Ether, Ripple, Bitcoin Cash and Litecoin are all up at least 6% Friday. Joining us now for more is Nolan Bowerly. He's CoinDesk Director of Research. Nolan, great to have you joining us. And talk to us about the bounce, because is it all about the April 17th tax deadline? Is that issue easing?
That had a lot to do with it. I think that in conjunction with the shorts that had become kind of overconfident around that tax date, and they started to really pile up. And those were all cleared just a few days ago when that big bump happened, when you saw on your chart when it spiked that one day.
So I want to talk about the spikes. I want to talk about the volatility, because at one point, I think yesterday, it was claimed that Bitcoin jumped more than $1,000 in just 30 minutes. I mean, this is an asset that has $130 billion in market cap. How do we see such volatility? And you talked about the shorts, but is it the short squeezes that make these sudden moves?
Well, the short squeeze was what happened just the other day, but it's also the sort of super liquidity of the entire asset class. You can change your position very quickly. You can go from a cash position or from a US dollar position on most of these exchanges. So we see big swings because we're not used to this type of liquidity, this type of technology that allows you to jump and change positions in the blink of an eye.
Is it the blink of an eye? Because we understand that transactions, the latency issue is there. The speeds of transacting that have been promised with particular likes of Bitcoin and the other overall protocols hasn't been as speedy. There are scaling issues.
Sure, there are definitely scaling issues. When I talk about the speed here, what we're talking about is being able to change your position. So if you've got this position in a company, you still have to go, you've got an equity position, you've got stock in a company, you still have to go through that infrastructure to adjust to the market. What we see in the world of Bitcoin is a global market. This is trading 24 hours a day. It never stops, all around the world. And you see massive movements because there's a certain herd mentality, and people are able to buy dips and move back and forth. And over the past year, there's been a real sophisticated trader class. Not sophisticated in the sense that we're used to on Wall Street, but a lot of these guys are doing it from their bedroom. But nevertheless, they get a feel for the ebbs and the flows of the market. And they're on Twitter, they're on Telegram, they're using all these services, they're sharing information in a very transparent way, and you see these big movements because they're able to move as this large community around the world trading constantly.
Talking about that herd mentality, I want to get into the Bloomberg and type in VCCY if you happen to be a user, and you'll be able to see really the spectrum of cryptocurrency as an asset class. And we haven't just seen Bitcoin on the rise. We've also seen the likes of Ether, Ripple, Litecoin on the up as well. Is it a herd mentality then that all boats will rise at the same time?
I think it's a part of it. Bitcoin is still the alpha and the omega of this asset class. Bitcoin still is in the middle and is what allows a lot of this to happen. Bitcoin really behaves as a kind of reserve currency for this ecosystem. So there is an aspect of all boats rising, certainly, but Bitcoin is still a class of its own.
Talk to me about Telegram, because you just mentioned how it's actually used by the crypto people out there, the industry really uses it to be able to communicate, but it's doing its own ICO and it's got its own lovers and haters in terms of buying into its Gram crypto asset that it wants to launch, because many feel that it won't be able to set up the network, the blockchain network that it anticipates it will. Will the issues in Moscow, for example, dent that credibility yet further?
Well, had they complied with that court order, there would have been no coin. It would have died instantly. In cryptocurrencies, of course, the keys themselves are the currency. When you trade Bitcoin, you're trading cryptographic keys. So when you had a court compelling the disclosure of cryptographic keys for the messaging app, that would be really taking away one of the main reasons why people invest in cryptocurrencies in the first place, and that's protection against asset forfeiture. So what we saw was a court saying that you must give us these keys because we need to be able to basically take away privacy and spy, even if there's a compelling reason, terrorism or personal or safety. In this case, they would be taking money. if you relate it to the coin. So had they complied with that, the coin would have had a lot of problems. And so in that case, it's really good for the coin. This really bolsters the investment thesis around it, because here you have a coin that's already willing to stand up to state actors. And that's really one of the meta narratives that we're talking about in cryptocurrencies. We're talking about, cryptography going from the sole jurisdiction of state actors to the hands of individuals, to individuals wielding cryptography for themselves. And here you had a company standing up for that. So I think in a lot of ways it bolsters the case for Telegram.
Also the case for the Gram coin, but what about regulation in general? How does that bolster the case for crypto?
Well, it's a bit of a mixed bag around the world right now. Lots of jurisdictions are taking different approaches. And I think because we are dealing with an asset class that doesn't really know the borders of a country, in a sense that it's a global technology, and if you have entrepreneurial jurisdictions out there, that's all cryptocurrencies need to get going. If they have a place where they can get started, Gibraltar or Bermuda or even many of the American states, then it's fine.
Nolan Bowley, very eloquently put. Thank you very much indeed for joining us today, Director of Research at CoinDesk, talking all things crypto moves of this week.
Thanks for having me.
Now, coming up, Sage Group takes a tumble. Shares dropped the most in 24 years at one point. We'll discuss why. That's next, and this is Bloomberg. Now, President Trump doesn't appear to be letting go of one of his favorite corporate targets, Amazon, of course. The president ordered the creation of a task force to review U.S. Postal Service practices. Now, the post office has lost more than $65 billion over the past decade as Americans increase their reliance on digital messaging. All of this comes as the president has repeatedly attacked Amazon and its CEO, Jeff Bezos, claiming that the e-commerce giant is draining the post office of money it can't afford to lose. Talking of what can't be afforded to lose, shares of the largest software company in the UK plunged today, at one point down the most in 24 years. Sage Group sank as much as 23% after a surprise warning that sales failed to meet expectations. Now, the company said growth will be hit by a decline in recurring revenue and poor performance in its enterprise software business. Joining us now with more is Will Wong of Bloomberg Intelligence in San Francisco. You were up very early, Will, looking at the performance of Sage. And talk to us about why this sudden, significant drop. I mean, they've only downgraded their 2018 outlook by 1 percentage point, but goodness, it hit the shares.
Yeah, Carolyn, it was definitely a very early morning, but I think what really happened was last quarter, during the first quarter, they reported that sales, organic sales, were up 6% versus that 8% target for the full year. Investors kind of looked at that as maybe a sign that they couldn't meet their full year target. And this announcement today really confirmed that. So the 1% shift in the organic growth really, I think folks are looking ahead a little bit even more. If they aren't able to hit 8% this year, what about that 10% target over the next 3 years? So this move today was a reflection of that. So it was interesting. Last quarter, they said they had some operational inefficiencies in terms of getting their salespeople up to speed with some of those new products that they had introduced, their cloud products. So they attributed to the miss last quarter to that, and this quarter they kind of reiterated some operational challenges in Northern Europe, and I think in Middle East and Africa as well. So there's some operational challenges. I think investors are very, very skeptical of whether or not they'll be able to get to that 10% longer term growth. So even though it was a 1% miss for 2018, folks are thinking ahead a little bit more, and that's really what I think drove the initial dive today. But the stock did recover as folks adjusted the news, and the company reiterated on the conference call today that there's no challenge or no change to the longer-term 10% outlook. So I think that may have alleviated some of the pressure on the stock, but again, to be seen.
I mean, looking at how analysts are currently rating the stock, if you dive into ANR analyst recommendations, you, of course, being an analyst on this particular stock, I mean, we are seeing more buys out there than there are sells. If you're looking at the terminal chart now in the red, we have but just 3 sells. There are 9 buys still out on that stock, even though we saw a tumbling in the share price. Where do you think the storyline goes from here in terms of competition? Because how has Sage been managing to keep up with the times? It's moving to subscription. It's been having to move to the cloud. Where does it face the likes of Xero and some of the other areas, companies that are coming in on its overall payroll and administrative software?
Yeah, so it has been a market leader, especially in Europe. Last year, it made an acquisition of a company in the US called Intact. Now it's Sage Intact, which is a cloud accounting software that's meant to target the small and medium-sized business opportunities in the US. So the US, if you look at their total addressable market, the US is about half of that. So if you think about cloud software overall, about 30 billion of TAM, the US is half of that. So they made that acquisition to target the US market. NetSuite, which was, again, purchased by Oracle. Everybody wants a piece of the cloud, I guess. But NetSuite, which is part of Oracle, is probably their biggest competitor. And they were about $1 billion in sales versus about 100 for Intact in the US prior to their acquisition by Sage last year. So very competitive market. You've also got QuickBooks, owned by Intuit, in the market as well, and Microsoft Dynamics. So for Sage to kind of start anew in the US, just given the big TAM, I think they do have an opportunity. And again, they're starting to market their products a lot more, but it's definitely very competitive. And NetSuite, if you think about the Oracle marketing machine, they have that there as well. Yes.
Will Wong, it's been fascinating listening to you. Thank you so much for coming in so early and coming on our show as well today as well. Bloomberg Intelligence, Will Wong there, all things Sage. Now coming up, Index Ventures has more than 24 fintech firms in its portfolio. We discuss its latest investment and the global fintech landscape. This is Bloomberg.
I'm Mark Crumpton in New York. You're watching Bloomberg Technology. Here's a check of first word news. Russia's UN ambassador says the U.S. appears to have adopted a policy to, quote, unleash a military scenario against Syria. Vasily Nebenzia told the Security Council today that Moscow continues to observe what he called dangerous military preparations. After the council meeting, Britain's ambassador denied a Russian military claim that the UK staged last week's alleged chemical attack in Syria.
This is grotesque. It's a blatant lie. It's some of the worst piece of fake news we've yet seen from the Russia propaganda machine. But I would like to take this opportunity to state categorically to you, the world's press, that Britain has no involvement and would never have any involvement in the use of a chemical weapon.
The Kremlin says that President Vladimir Putin and French President Emmanuel Macron have agreed to coordinate actions to avoid further military escalation in Syria. France and other U.S. allies are considering a military strike in response to that alleged attack in Duma. The Kremlin said both presidents praised the upcoming visit of the International Chemical Watchdog's fact-finding mission to Syria and pledged their assistance to that effort. Hezbollah's leader says the militant group isn't intimidated by President Trump's tweets that missiles are headed to Syria. Hassan Nasrallah added that they do not scare Iran, Russia, or Syria either. Hezbollah maintains there is no logic to accusations that the Syrian government used chemical weapons in Duma. Russia's ambassador to the UK, Alexander Yakovenko, says Britain's continued refusals to allow Russian representatives to meet with former Russian double agent Sergei Skripal and his daughter Yulia are suspicious.
We want to investigate the case, and we definitely want to hear her story. How it happened, what happened, we want to see the evidence. The story is not over. For us, this is just the beginning. Sorry about that. We want to have a full-fledged investigation.
Meantime, the International Chemical Weapons Watchdog has confirmed Britain's finding that the Skripals were poisoned with a nerve agent. Russia denies any involvement. Vice President Pence is in Peru for the Summit of the Americas. He's filling in for President Trump, who pulled out to focus on the U.S. response to an apparent chemical weapons attack in Syria. At least 4 other presidents also have decided not to attend the summit. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. In New York, I'm Mark Crumpton. This is Bloomberg. Bloomberg Technology is next.
This is Bloomberg Technology. I'm Caroline Hyde. And as we spoke of earlier in the programme, Tesla CEO Elon Musk making some big claims on Twitter today, saying the electric vehicle maker will be profitable and cash flow positive through its third and fourth quarters, which makes it a good time to check in as any with the company's cash burn. Now, if you type in GTV to your Bloomberg terminal, you will see Tesla's free cash flow. Well, if you currently come to my Bloomberg, you'll see that free is the operative word here. There hasn't been much free cash flow. In fact, it's been cash burn, as you'll see over the years. We're always below that red line, the blue graphs there showing how much negative. Last year, we had about $3.5 billion of cash burnt through. This year, we're expected, well, in the first quarter, some $1 billion to be burnt through, and again in the second half of the year by analysts. However, Elon's saying no. We won't be burning through that in Q3, Q4. We'll be positive, even though analysts still expect there to be adjusted net losses of some 192 million and more than 300 million in the following quarters. So interesting stuff. But as you'll see, Elon fighting against those charts and notably the economists reporting. Now, let's take a turn now and look into VC. Index Ventures led a $28.3 million, that's a 23 million euro Series A round for Alan. It's a Paris-based digital health insurance company, adding to its portfolio of fintech firms it's invested in. Now, I'm pleased to say we caught up with Jan Hammer. He's the general partner at Index Ventures here in London, and asked, well, what drew the VC firm to the French company? Take a listen.
Alan is a company that represents a bigger e-health vision. It's a company that's the first insurance business that got licensed in France since 1986. And it's the first company that's offering fully digital health insurance for companies. It's mandatory by law in France that companies have to co-insure their workers. So they're playing to this trend, and they're providing transparent, comprehensive, and pretty clear insurance, taking business from the incumbents.
And this is an international opportunity. They're obviously key in France, but what about the growth prospects?
The French market is 36 billion euros alone. Clearly, we wouldn't have invested if the opportunity wasn't beyond France. So for now, the company is building its product in the domestic market, but the ambition is pretty quickly go outside of the French borders.
I mean, it's interesting, we're sat here in the city of London, where you might feel most of the fintech is being born in Europe. You might look to New York and America, but clearly there's some fintech going on in France as well.
Well, historically, we've invested in fintech in the main hubs, and that's really driven by history, by where the financial services industries have been built, in London, in New York, and increasingly on the consumer side in San Francisco. And at Index, we've already invested about $500 million in fintech alone. But the case of Alan shows that entrepreneurs can be born anywhere. It's sort of coming of age for Europe. You know, great, big, ambitious companies are born outside of what you'd expect are the core hubs, like London, like Berlin. Paris is going strong and huge, and we have high expectations of this company.
What about, therefore, when you say you're very active, I mean, $500 million put to work. I think CB Insights says that Index Ventures, and in fact, got one of the biggest portfolios out there in fintech. You're one of the most active players. Where's hot right now in terms of the fintech spectrum, if you're not just looking at insurance tech?
We're looking at companies that are addressing big populations, big markets, and what I would like to say is it's companies that are expanding those markets, expanding the opportunity, addressing the unbanked or the unserviced, and expanding the total size of sort of services offered. And as an example, Funding Circle, just here alone in the UK in 2017, had extended $1 billion, well over £600 million of net new loans to small and medium enterprises. On the Robinhood side in the US, the millennial population doesn't really have or hasn't had access to brokerage, to equity investing. About 15% of the millennial population have ever bought a share. Now, Robinhood today has over 4 million accounts and growing extremely strongly. So it sort of shows that you've got net new markets that you can address. And in the case of a company, again, Europe originated, like Adyen, Adyen's helping businesses like Burberry, like Nike, like Uber, to go to completely new markets where those services otherwise wouldn't have existed.
You name a couple of companies there, Funding Circle, Adyen, which are very well known, and potentially looking at coming to the market. at some point. We anticipate they'll go public. We've seen a number of your companies in your portfolio already go public. Dropbox, for example, comes to mind. We just had one yesterday, Zuora, come to the market as well. Is 2018 the right time to come to the market? What is it? Have we got a perfect storm?
I would say it's a combination of two factors. One is the markets that are favorable. And of course, we're not here to predict what they will become, but so far so good. But let's focus on the companies. We've got a cohort of some brilliant businesses that have been working on building their companies with private capital for a while. And one indicator of their size, scale, and maturity and impact is the percentage of international sales. So in the case of Dropbox, more than 50% of revenue is derived from outside of the US market. And if you look at the sort of the cross-section of the recent IPOs, the average is more than 30% of revenues are outside of the US. So that shows a certain scale and maturity. I mean, these are international franchises. And I would highlight Spotify, which is not in index portfolio, but again underscores how far Europe has gone. And I would argue as far as, Europe is at a point where, US was a decade ago, but catching up and growing at arguably a faster pace. Spotify IPO has been incredibly successul. It's really a global phenomenon. It's a company built on European engineering talent and one that has conquered the world. So I can't sort of predict what IPOs might happen, but I would say, in our portfolio, there's a good half a dozen or if not more companies that, are of interest to public markets potentially in the near future.
What about that private capital that's still flowing? There's reports out there that another one of your portfolio companies, Revolut, might see a big push up in its overall valuation and a lot more money coming from a new investor. Are we still seeing more and more private money, capital being put to work in startups? So the pocket's still as deep as they always were?
Yes, I would say it's never been a better time to be an entrepreneur. And the availability of capital is there both at the seed stage, the venture stage, and now the growth stage. So companies can get and are getting funded. I can't comment on Revolut specifically. I would say Revolut is doing something quite special. We're very proud of that company. Similar to what Robinhood have achieved, is really broadening that access to mass populations, coming with a Trojan horse of a product that's free at the basic level, and then sort of building a broader range of services on top of that.
That was our conversation with Jan Hammer, General Partner at Index Ventures. Now, Apple is issuing a warning to its employees. Now, the tech giant is telling workers to stop leaking information to the media, which could hurt company sales. The company posted a memo on its internal blog saying 29 leakers were discovered last year. 12 were arrested. Apple says future violations could result in job loss and, quote, difficulty finding employment elsewhere. Now, coming up, Zuckerberg's political week has come to an end. We look back at what went down in Washington and what lies ahead next. This is Bloomberg. Well, fresh from taking on US lawmakers, Facebook CEO Mark Zuckerberg is now taking on one of England's oldest academic institutions, Cambridge University. During his testimony, Zuckerberg said Facebook was questioning whether there was, quote, something bad going on at Cambridge University overall that will require a stronger reaction from us. Zuckerberg claims that Facebook discovered a whole program associated with the school in which people built apps that vacuumed up the data of its users and their friends. This would go beyond the activities of Alexander Kogan, a researcher at Cambridge who was at the centre of the Cambridge Analytica scandal that led to Zuckerberg appearing before Congress. Now, the university said it would be surprised if Zuckerberg just became aware that a number of its academics had been researching Facebook user data. In fact, it said some of that research had been done with Facebook. And joining me now from New York to discuss the week that was in Facebook, it's Sarah Fryer, who covers the social media platform for Bloomberg. Sarah, travelling to Washington this week, you've been our eyes, you've been our ears inside the hearings. This was really surprising, Cambridge University being brought up, and our colleague Jeremy Khan's been delving into what else the university's been doing, perhaps building up software that other companies have used. How far do we know the investigation by Facebook has gone? Is there anything new?
Well, we know that Facebook has this sort of long time tense relationship with academics because we want to understand this force in our lives, 2 billion people on this platform, even more than that actually, who are interacting with each other. It's an academic's dream to figure out all of the societal implications of people talking with each other in a recorded way. So in some ways, it makes sense to understand Facebook academically, especially as we see their influence on elections, on people's mental health. And so Facebook has tried to work to give academics a little bit more visibility, and at the same time, they want to toe the line on privacy. So it has become tricky for them in the past, and they've worked with Cambridge University. So I was very surprised hearing this from Zuckerberg during the testimony, that they were at all concerned about whether there was malfeasance at the academics level. Certainly it's worth looking at, but academics are usually not the first ones we think of when we think of the potential trouble that could come from learning about forces in our lives.
So true. I mean, let's take us back to the testimony, take us back to the room. And it seems as though Mark Zuckerberg overall defended his company from an investor's point of view pretty solidly. Does his business model walk away intact?
Well, Facebook gave some answers, Zuckerberg gave some answers that I felt were easy to poke holes in over the long term. In testimony, they were vague enough, broad enough that it allowed the questions to just slide right off him and made everyone feel like, okay, this is exactly what you've said before, nothing new here. But Facebook said that users are in charge of their data first and foremost. What he was talking about is the data that you choose to share. What he wasn't talking about was the way Facebook tracks you on and off the platform, not just you, but people who are not even users of the platform. Later on in the testimony, he did admit that Facebook tracks users who are not logged in or who don't have accounts. And that was just one of the many ways in which Zuckerberg's testimony is going to be challenged in the future. So in the moment, I think he did a great job. He kept his cool. We are not, running quotes over and over on this platform from him that really show any sort of gaffe or a slip up. But I think that right now we're in this period where Facebook is going to have to answer all those questions where Zuckerberg said he'd have to get his staff to follow up. And I'm really curious to see all of those answers.
And perhaps a bit of a media dream that his compensation then comes out just at this time that we're all eyeing up his business model. And he's being paid a fair bit more, it would seem, from the previous year. Talk to us through the numbers that you're seeing in terms of Zuckerberg's compensation for 2017.
So I have it pulled up right here. Facebook, the compensation went up to $8.85 million compared with $5.77 million in 2016. That is a increase that is completely related to his travel and security costs. More than $7 million in costs for security, more than $1 million in costs for the private plane. That took him around to all these states where he went on this sort of tour to understand Facebook users around the country. He was in Montana, he was in South Dakota, he was in New Orleans, he was all over the place, North Carolina. He was trying to understand everything about what Facebook users want from Facebook. And remember, at the time, it's kind of crazy to think about it now. People thought that maybe he was running for president or something. People couldn't really understand what this tour was all about. And I don't know if it actually increased his likability at all. We've got him testifying in front of Congress right now, but it certainly did increase Facebook's costs for his travel and security.
And talk to me about the tour that might not end, because, of course, here in Europe, they want their pound of flesh now. They want Zuckerberg to still come over across the Atlantic, come see us here. But so far, it seems that the CTO is going to be coming to the UK April 26th. No real move on that?
I think the company feels like if they give Zuckerberg in in the UK, then they'll have to do it in all the other countries that want to hear from him. And certainly they can't have their CEO testifying everywhere, although everyone would love to hear more from him. I think that they're going to stick to the US. They're not going to agree to do it anywhere else unless he's subpoenaed or something. They are sending one of their top deputies, either Michael Schrepfer, who's their CTO, or Chris Cox, who is their head of product.
Yeah, I think the CTO has been confirmed for April 26th, and we'll see how they continue to respond to EU lawmakers. Bloomberg's Sarah Fryer, fantastic to have you throughout the week. Phenomenal reporting from Washington and New York for us. Safe flight back to San Francisco. Now, coming up, earnings season is in full swing, and Netflix will be the first major tech company to report. We discuss what to expect from the results next. This is Bloomberg. Now, the value of Elon Musk's SpaceX keeps soaring. According to PitchBook data, the rocket maker was authorized a $507 million fundraising round at a valuation of about $25 billion. That would make SpaceX the third most valuable venture-backed startup in the US. That's after Uber and Airbnb. Now, if there's anything left with the potential to cheer up technology investors, it's an earnings report from Netflix. On Monday, the company will be the first tech megacap to report earnings, and, well, it comes at a critical time. After 4 sell-offs of 3% or more this year, the S&P 500 Information Technology Index is trading just above the halfway mark between the March 12th record and the 2018 low on February the 8th. Netflix could be the bright side for the volatile tech sector. Joining us now in Princeton is Geeta Ranganathan of Bloomberg Intelligence. Geeta, I'm looking at the EM function on Bloomberg. I'm seeing that we could see revenue up about 40%, profit up about 60%. This could be some strong numbers.
Yes, absolutely, Caroline. But unlike other companies, in the case of Netflix, it's really not so much about the EPS and the revenue. It's really about the subscribers. This has been a subscriber growth story quarter in and quarter out. And good news for both Netflix and investors is that expectations are really strong. Netflix is coming off of a phenomenal fourth quarter. It was actually their best quarter ever. And so that's been feeding some really bullish expectations going into 1Q. Netflix itself has projected about a 30% rise in its subscriber gains to almost about 6.5 million, just give or take a little. And the general sense is that they're going to handily beat those estimates. So things for 1Q looking really good.
And where geographically are we speaking of the big growth here?
The big growth is going to come from their international markets. They're projecting about 5 million new subscriber gains in those markets. And, you know, the U.S. is kind of steady state. It's about 1.5 million, give or take.
It's fascinating when you're looking at the share price of Netflix. It obviously got hit by the rough and tumble of the market over the course of March, but overall it has outperformed the likes of Facebook, the likes of Amazon to a significant degree. I mean, it is the FANG that outperforms significantly. I mean, where is all the how much of the optimism is baked in? How much they have to keep over blowing where their subscription estimates are going?
Yeah, so Netflix has really been unscathed in all of this technology sell-off. I mean, it continues to be a really big tech darling. As you mentioned, I mean, the shares are up almost 62% year to date. So it's really that subscriber momentum. Now, Netflix has managed to create this, what they call this virtuous cycle. So as they keep adding more and more subscribers, they keep investing more heavily in content, which then in turn drives, you know, further subscriber gains. Streaming is a really fiercely competitive market. They know that content is the main differentiator. They know they have to keep that subscriber momentum going. So they are aggressively investing in not just content. They're actually spending $8 billion on content this year. That's more than any other media company is spending. But they're also investing very aggressively in marketing.
We'll see if that investment continues to pay off. Geeta Ranganathan, you'll be following it closely come Monday when the money breaks for Netflix. Bloomberg Intelligence, great to have you with us. Thank you. And that does it for this edition of Bloomberg Technology. A reminder that we are live streaming on Twitter. Check us out. It's @Technology, weekdays 5 p.m. in New York, 2 p.m. San Francisco, 10 p.m. right here in London. That's all for now. Have a wonderful weekend. This is Bloomberg.